All right, mates, welcome back to the channel. Hope everyone's doing well. Welcome to the CryptoCast here on Wednesday evening. It's a little bit before 7 p.m. We're just talking about some altcoins here, some correlated assets. We did Ethereum Classic, talking about their correlation and how you look at that. We've done Solana this evening, and now we're going to break down Binance because I know a lot of members in the trading group have been trading Binance successfully. Obviously, you can see the run-up here. As far back as the end of July in the 240 range all the way up to 305. So it's been a great leverage trading asset token to be in. So I highly recommend that. If you go further back to July, you can see it was as low as 220. So it's gone from 220 all the way to 300. So an 80 basis point move in about a month, a little less than a month. So we're looking at open trade here. Now, why am I talking about this right now? Because it's an important lesson for you in terms of the mental aspect of trading to understand when you want to get out of a trade, okay? And it's different for everybody. Of course, everybody wants to get out of a trade and profit, right? But how do you do that, right? You've got to be disciplined and set your parameters, okay, based on the individual token because they all behave different in one way or another, okay? And so being buy up at 288, why would we buy up 288? Why would we look at that right there? We'll look at the confluence right there of your moving averages. So we're going to look at it right there. So at the time that the trade was entered at 288.71, the 5-day, even though we're using the 7-day, let's be consistent here because I just so everybody knows the methods that we use. So I switched to 7 and then switched to 21. I don't like using 10. I say that all the time to people. I don't know anybody uses 10. It's just kind of an oddball thing. 721.30, okay, and also 721.55. But you look at that, okay. Let's go back to where we were at 288.71, okay. So we're right in here. At that particular stick, 285, 285, 288, where your 30-day was your 721 and 30, upper left-hand corner of this chart you're looking at. So that's why you enter a buy up because it broke through all of them right there. 721 and 30 broke through every single one of these daily moving averages, which is bullish, okay? Which is why you would go buy up. Doesn't matter what leverage you pick, mate. I mean, you could have picked 25, you could have picked 50. Okay. But that's going to lower and narrow your liquidation rates on leverage trading exchanges. Okay. 10x is a nice little sweet spot in the volatile market we have right now. Gives you just enough space to recover. If it goes against you, it gives you a little bit of more time. Anything below that obviously is golden. 5x is fine. 3x. So you're looking at breaking through those lines here. So the question now is, okay, when do we get out? Well, at 299, we're at 37.63%. We are red, okay, but in this 4-hour stick, but we're well above our daily moving averages. So then it just becomes a question of where do you think the direction is going? We know Bitcoin is red, Ethereum is red, Ethereum Classic is red, and Solana is red. Everything is red. In this last 4-hour stick that's about ready to end, okay, coming up. And so what do you look at, right? Well, you have plenty of options. And this is what people forget. You don't have to give up on this trade. It's already profitable. So it's a matter of don't be greedy, right? Like it's a matter of, okay, 37% gain in, we're looking at 12 hours, less than 12 hours, okay? Who's going to fret at that, right? Take the money and go, right? Okay, or buy a second sell down trade right now at 299 to protect your buy up trade from 288. So if it does continue to go back down, you're going to profit as it goes back down, and then you can exit that trade. It isn't really going to matter because you made it all up with the open down trade, okay? And that's how you continue to play that game